Welcome back to Look the Trader, and today we have Brian Leeners here from Home Run Resources. Could you please introduce yourself and talk a little bit about your company and what makes you special in a sense?
Thanks, Lucas, and we appreciate the opportunity to introduce our company to your audience. What makes Home Run special? I think it's the way that we fit into the energy transition, which everyone talks about, but I'm not sure if everybody truly understands.
Mm-hmm.
The energy transition is critical elements all the way out to alternative energy generation and transport. So from that perspective, that's the approach that we've taken since day one with Home Run
Mm-hmm.
Resorts. I think that's very distinctive. Uh, we're not a resource company. We're more of a tech company now, from the perspective of the research and development we're doing with our partners in that area, which extends the value proposition of an incredible resource that we are lucky enough to control in Brazil, which is one of the best silica sand deposits in the world. And if people are not aware of this, silica is one of the most important critical elements in the energy transition, right up there with copper, from the perspective of its use case in solar and its use case in energy storage.
Mm-hmm. Could you perhaps go into detail a little bit more about the silica market, perhaps who are the leaders and where is it most needed? Perhaps, as you already said, solar is one of the key industries.
Silica is the most used commodity in the world next to water. Again, most people don't know that. It's a 20 to 30 billion ton a year marketplace, which dwarfs almost any other thing besides water.
Mm-hmm.
Within that context, it has a hierarchy of use cases, and those are completely dependent on grade. So if you
Mm-hmm.
have very, very high silica content with very, very low impurities, you're at the top of the pyramid. If you have average silica, you're at the middle of the pyramid. And if you have beach sand silica, then you're at the bottom of the pyramid. The beach sand silica sells for $20 a ton. And at the top of the pyramid, you're talking $10,000 plus per ton, but the grades are very high. We're talking
Mm-hmm.
4.9s minimum.
Yeah, and that's where you have to really control those impurities, which are really negligible in a sense, yeah, but important to the price tag, right?
Correct. Yeah. And that's the economic side. So the economics are related to logistics. Unlike most critical elements, you're not moving grams or pounds. You're moving tons. So the
Mm-hmm.
elimination of impurities is getting rid of kilograms against, 1,000 kilograms as a ton. Whereas with gold, you're removing, 1,000 kilograms and you're left with, if you're lucky, a few grams of gold, which is
Mm-hmm.
very easy to move afterwards, but extremely expensive to process. Our processing is relatively cheap because our starting grade is so high as an in situ resource. But we still need to process, and we're looking at green and clean ways of doing that relative to taking our product into that 4.9, 5.9, 6.9 range so that
Mm-hmm.
it can become an input material into those really high end uses in that energy transition and tech space.
Mm-hmm. And could you explain your free phase plan and as well give a little bit insight about the grade that you have in situ right now?
Yeah, that's a good question. What we tried to do was just from the perspective of dealing with the investor base that we were exposed to early on and continue to be exposed to, although that
Mm-hmm.
is transitioning to institutional. We wanted to make it so that people truly understood what we were creating within that vertical integration. So we broke it into three pieces. The first piece was uh, acquisition and control of the asset, natural for a resource materials oriented company to do that. The second phase is all about logistics. It's about taking that asset, extracting it, which is a front end loader, literally, and then moving it to market. And that's
Mm-hmm.
complicated in Brazil. We don't have the rail network in Brazil that you would be commonly used to in places like Canada, the United States, and Europe.
Mm-hmm.
So using the road with a truck and using the ocean with barges and ships is something that needs to be organized and put together. And our focus is on third party providers, not on building that ourselves. And then the third phase is all about getting our product into those verticals. And the verticals that we're focused on are solar and energy storage within the context of battery and true grid scale energy storage that we're working on with our partner NREL, which is the U.S. Department of Energy.
Mm-hmm. And because you're essentially building all this infrastructure and you need partners to do that, right? Could you just give insight into who you're partnered with and essentially what it is all about?
We spent the last 6 months working on that logistics plan. That's all coming together. In the next little while, we'll make announcements in that area. But we literally broke down the entire logistics pathway into its relevant components and looked for a service provider, in other words, no capex for us. So that service provider is working on a unitized scale, which in our case is a price per ton. So from extraction to transport to processing to transport to port, etc. All of that, what we're trying to do with all of that is eliminate the capex element normally connected to that if you want to build all that yourself, and utilize partnerships in place of that. So there will be announcements in that regard over the next little while based on the work that, again, has been done over the last 6 months.
Mm-hmm. And you also recently partnered up with Cymex, which is for you essentially a big partner, right? And could you just talk a little bit about generating revenue and just looking forward into the next few months? How will you tackle that and essentially also complete those contracts, right?
Yeah, I mean, what they are is really the end of our solar vertical. So from that perspective, rather than focus on selling our silica sand into companies that make solar glass, we've elected to become a solar glass company ourselves. Normally that's done with some kind of economic study. In this particular case, we won't need that economic study, and the reason why is because Cymex will be our next door neighbor in Brazil, producing and manufacturing final solar cell product, and we will be the solar glass partner that will supply them with that glass. And in that marketplace for solar glass, the number one player in the world, 90+%, is China. But China's also exposed to logistics, and the solar glass logistics are more expensive than the unit cost of solar glass. So to move a unit of solar glass from China factory to Brazil manufacturer results in twofold, sometimes threefold increase on the unit price. We won't be exposed to that because we'll be moving our silica product, which is already fit for purpose. So our in situ raw material, once it's sorted into size, can be placed into a solar glass furnace, produce the solar glass, and the plan is that we will have real estate right next door, literally. So like you and I are sharing this screen, Cymex and Home Run will be sharing ground as neighbors. So that eliminates the solar glass logistics and allows us to have a far more competitive price point than even the Chinese in the Brazilian market.
At the beginning, you already made this distinction between sort of the tech company and a resource company. Could you explain to the listeners why, in this case, you are essentially branding yourself as a tech company and how this fits in with Silica?
Because our true value proposition is leveraged off the raw material. So from the perspective of being a materials company, most materials companies historically have ended at process, and then they hand that product over to end use customers. We want to be our largest end use customer. And again, in the solar glass space, we want to be one of the dominant players on the planet. We have a strategic advantage being in Brazil from an economic cost perspective. We have another strategic advantage based on the quality of the resource that we control. And then we have a third strategic advantage based on the partnership that we've announced with Cymex. And then we have a fourth strategic advantage, and that's based on the fact that our price points relative to the demand in the Brazil market, which is going to be exceptionally high. And to put that into context, the Brazilian market going forward over the next several years is the number 2 market in the world behind China for permitted installed solar. And what that means is these are projects that have been permitted by the regulatory bodies, but they're not yet built. They don't even actually have product yet to build their utility scale solar plants with. So from that perspective, Brazil is at over 100,000 megawatts in inventory in that segment. China's at 200,000 plus megawatts of inventory, and Brazil's number 2 behind China. So being specifically in the Brazilian market will give us the economy of scale that's required to actually be internationally, at least in South America, Central America, and the Americas in general, to be internationally competitive in what we believe is a wide open America's marketplace for solar glass.
Mm-hmm. There are also a lot of questions from investors out there who are just asking for the laser processing method, because you partnered up with UC Davis to essentially purify to essentially 99.99% silica, right? So how scalable is that technology?
It's as scalable as adding another laser. So from that perspective, we use one laser in the lab to test the technology. That was successful. To scale up, we would use multiple lasers, all fed by electricity, so it's green and clean, which was the purpose. Our mandate to UC Davis was threefold. One was to achieve a certain grade of silica, which obviously we wanted what's called tech grade. The second was to be able to do that with a technology that could scale. And the third was to be able to do that economically. So we're operating on those 3 legs as the mandate. And we went into that process doing that. So it's our view, once we get through the process of securing the intellectual property related to that discovery, which we're doing now, to give people more detail relative to what we're doing. But people can be comfortable with the fact that we're not using our own built laser technology. We're using third-party laser technology that can be multiplied to create what would be effectively a laser grid or a laser matrix, so that we can feed quantity through that matrix and get the same result, but over a larger size. And that creates economy of scale relative to the fact that processing silica up to those levels is a massive capex endeavor, and then it's a massive energy and chemical endeavor. We still have the energy costs, but we don't have the chemical or the capex related to the other processing steps. So we view our economics as being complementary and actually giving us a competitive advantage.
Mm-hmm. There were also some questions about a potential private placement. Are you considering funding in the near future, or is it just something you're not considering at the moment?
We just closed the financing. We've only done 2 financings since we initiated this business model about 18 months ago. We did $1 million at 10 cents to a core group of investors who have been very supportive in the aftermarket. And then generally speaking into that group plus, but similar type mentality, we did another financing for $1 million at 50 cents. We closed that in April of this year. We have warrants attached to both of those financings, which again can be utilized within the context of the market to further supplement our capital in the treasury. So at this point in time, we don't anticipate a further financing, but if the opportunity presents itself to do that strategically, then we would take advantage of that. And obviously, we're looking for a transition in the type of investor based on what we've built so far to a more institutional investor. Although I give great compliment to the current investor base who have really been supportive, and you can see that in the value of the company as it's grown over those 18 months and continues to do so. So At this point in time, no financing contemplated. But if the opportunity presented itself to do that strategically, then we would take advantage of that within the context of our market cap at that time.
Just as a little follow-up to the question before, can you just talk a little bit about your share structure, like how many shares are there outstanding, some key shareholders?
Yeah, we have about 50 million, just a little over. I think it's 52 and change million shares outstanding. 25% of that sits with key insiders, myself included, directors, officers. Then we've got a core network of very supportive but very large, high net worth shareholders who have helped not only within the context of doing the financings, but have also participated in aftermarket purchases to increase the size of their ownership. So I think every day that we trade in the public markets in Canada and the US, we're really tightening up that structure. And again, you can see the effect of that within the valuation curve that has gotten steeper over the last little while, which is starting to reflect what we've built versus what's coming. But I still think we're undervalued relative to the asset base that we currently have and the execution of our business plan over the last 18 months.
And just looking into the future ahead, what is your long-term goal in, let's say, 2 to 3 years out? What is your key to increase shareholder value once everything is up and running? And is it just simply scaling?
My view is that if you want to build value in your company, whether it's private or public, you execute on your business plan. Our business plan is very scalable. Again, we're complemented by an amazing basic resource as the base of our business model. And then from that, we're working in those verticals that I've already mentioned, the energy storage and the solar. And we've taken steps in both of those to get to end product, to get to our own proprietary end product or a proprietary end product that's shared with a name brand partner. For instance, the U.S. Department of Energy with NREL on the energy storage side. And UC Davis is doing great work in their lab in California relative to moving our product into the high end of the energy transition use cases, and also into the high end for use cases in the tech sector. So in some situations, we will be a supplier of final end material into industries in those areas. And in other cases, for instance, in solar glass and solar in particular related to perovskite solar, which we see as the future of solar, we're putting a lot of energy into becoming a leader in that space. And again, we're doing that through partnership. I'm a firm believer that redundancy is a bad path. We do not have ego here. We have no problem sharing the pie with partners in order to scale something that's literally ginormous. So I think we have the potential to go unicorn in those verticals, as well as unicorn off of our materials business.
Because you have such ambitious plans and you're executing also well with so many partners, are you still anticipating to generate some revenue this year, as it was mentioned in the presentation?
Yes, we are.
Quick and easy answer.
The logistics is a key factor in that. There may be some surprises relative to where that revenue comes from, but the logistics related to being a supplier of high quality silica into those energy transitions and tech space markets at the top of that pyramid. That's the key. Once we get those logistics in place, then we can start dialoguing with detail with parties that have reflected a serious interest in what we have.
And there was one user that asked about the UC Davis technology and if it would be essentially advantageous to, once you get a patent granted in Brazil, to then send it to Canada for North American patent rights.
Yeah, we will do that. That is our strategy, utilize legal counsel in Brazil to secure all of our IP, not just in
Mhm.
Brazil, but obviously in international markets that we see as lead markets relative to deploying that as a solution.
Mhm. And since we're already at the end of the interview, could you, or perhaps is there any last remarks or things you want to highlight about your company?
Yeah, I think it's really important. We've had some market success over the last little while. That's been achieved over uh, or after what was a long period of consolidation in our share structure. We're now starting to reflect the value that we've already created. Um, we have an MRE coming, a maiden resource
Mhm.
on our asset in Brazil. Um, the in situ value of that should be north of where we're currently valued. So you're getting all of the vertical integration for free at this stage. So I know we've achieved some pretty significant share price movement over the last while, but I think this is an entry point related to the second phase of our business and the third phase of our business, which is revenues, and obviously growing out in those verticals, in particular as our own use case in those verticals in the solar and the energy storage sector.
Well, Brian, it was great talking to you, and until next time, I would say.
Thanks, Lucas. Appreciate your time, and thanks again to all your viewers for taking the time to watch the interview.